Sometimes I say down and I say the local mystery and just trying to search my soul. Found the answers and the reasons why. I've been through crossroads in my life. Really don't know which way to go. What's that? Go. Do my best. Waste another day. Go. Stay single and stay free. Victory over. Single, single, me. Does the best and the feeling Mexico. Do my best, waste another day. Let go back. To the island where the shrew died to pass. Give me a voice.
Going back at the end of the month.
Be there. Won't go back. Someday we'll take the whole chance. Would they want on a honey? Yeah, now, so sailboats searching for the breeze. Out there, it can stick right to your skin, make you feel fine. Make you feel fine. See there, we take on the chat. You heard my strange proposal. You better and let's move. Tries to steal away. You really want to yeah, we take that for a chance. Got a house down a back road, it got a flag. On the front porch, got a dog named Waylon. I've got a driveway that needs paving. I've got a boat with a two-stroke, a couple guaranteed to make you laugh jokes. I got friends in low places. Yeah, life is what you make it. Stars, I walk with my name or statue in my hometown. Nobody called name after me. Here my mystery, but I go down to the honky tonk. Got a girl named Sheila. She goes bad shit. Tequila, got a job that gets the job done. I got a loan at the bank, it's a big one. The only place you might see my name is on the wall for a good time call. I'm a local legend on a Friday night in a past blue ribbon. Neon light. Stars, I walk with my name or a statue in my hometown. I'm gone. Nobody got name and babies after me. I'm going history. Go down to the honky tonk. I go down to the honky tonk. I go down to the honky tonk. I go down. I go down to the honky tonk. I go down to the honky tonk. I go down. To the honky tonk, I go down to the honky tonk. I walk with my name, or statue, nobody comes name their babies after me, and I got history, but I go down to the honky tonk. Honky tonk, I go down. Honky tonk, I go down. Go down to honky tonk. Honky tonk, I go down. To the honky tonk, I go down. Go down to the honky tonk.
Hey, Matt, good to see you here. Miss you in the Discord room. You always had some really great charts. Glad to have you back. I'm just putting a few things together here.
Big truck crunching on a pork round when she pulled up. She had to be thinking this is where rednecks come from. She had Hollywood written on her license plate. She was lost and looking for the interstate. Feeding her in chance, and I was a man for the night. So, yeah, the caution.
All right, we'll get started here in about 3 minutes. And put up our prep screen. Take a moment to read what we have in the news. And our next upcoming Fed speaker and stuff. We'll get started in about 3 minutes.
I was sitting there thinking about a pretty face, kicking myself for not catching her name. I threw my hat and thought you could have been love. I knew before couldn't run her down. She probably didn't like me anyhow. So I watched her disappear into a cloud of dust. So there's a culture. There's a little country store in the North Coast South. We gotta stop it. Smith Bell, summer sweet tea. Then I'll take you to the interstate, but it right. We'll bring you right back here. Yes, it's Georgia. He played tricks on me, or am I really seeing what I think I see? In one of my dreams coming back to me. But something very right. And she's got there. It's better. Summer sweet tea. Mama gave her a big old glass and sent her right back here to me. Thank God for good direction. Turn green.
Good morning, everybody. We timed that almost right, a few seconds off. All right, let's get started. Happy Friday, everybody. Welcome to our live trading room. We do this 3 times a week on marketinstitution.com. It's one of our subscription services. And we also do our community trading room every Tuesday and Thursday. Tuesdays, we alternate. We have special guests where we talk about crypto and some of the basics and the fundamentals of crypto. And we are finding that within those crypto markets that the patterns and techniques that we teach are very, very pronounced as well. So today we're going to focus a little bit more on the futures market, kind of the equity indexes. As we get started, we are at pretty much new highs on the S&P and the Dow, and we'll take a look at those in a moment. Our prep screen zones are zones that are formed during the regular trading hours on increasing volume. So we do anticipate with a high probability when price returns to these areas that we'll see some price change direction. Now, we always have to manage the risk, so make sure that you're risk is the size based on your trading plan, okay? Oh, wow. We also have a flash sale going on that you can check on the website. Wow, that's huge. Okay, so we will check that out, and I'll talk about that a little bit later. This morning in the pre-market, we got bank earnings, and some bank earnings, okay? This will start to tone a Friday session. We're already seeing some movement on some of the stocks, not necessarily the banks, but we're seeing like Tesla down 15 bucks, 16 bucks. They must be looking for, how they're going to create all of the new stuff that is being pushed out. Okay, a lot of fascinating news on here. Kind of looking at some of the posts that Elon put out there yesterday about the Optimus and also the new robo taxi. Kind of feels like we're in a movie, doesn't it? But with those movies, you got to wonder how the transition really happened. You know, Even if you're a Star Trek fan, you're going, well, wait a minute. For Star Trek to get into a civilization or a society like it is, what changes had to be made from, I guess, what we call the olden days to what we're seeing now? Today, I went and did a little bit more of the forecasting using Fibonacci price extensions. Okay. Now, one of the big reasons I did more of the Fibonacci price extensions outside the range of what we've been working within the last few days, okay? And over the last 2 to 3 days, as you can see, we've had a pretty solid channel. This is not easy trading environment, okay? Very difficult, kind of whipsaw, a lot of action, okay? But what we do know about this area now, where we have resistance and we have support, the area in between is where we have field orders, okay? So price should easily move through these areas. The trick is finding a way to get into it, okay? It's not just hit the button. We need to find a place where there are multiple buyers and multiple sellers. And right now they are outside of this range. Now, a price breaking below the low, we have a couple of zones here on the NQ. To the downside, I'm mainly focusing on the second one down as my first trade opportunity. Now, the reason I'm focusing on the second one down is mainly because of where the Qs are at the pre-market. In the pre-market, we see the Qs are trading down $1.04 at 491.55. And if we look at 491.55, there's really nothing there as far as a support or a zone. It's actually a little bit lower, okay? So once the Qs do come out, we'll have a little bit more focus on where we're going to look to take the long and where we're going to look to take a short trade, okay? So remember, futures are a derivative instrument and they follow the cash market, okay? SPY, kind of really quiet, okay? Now, what bothers me about when the S&P and the Qs are really quiet is I jump out to the S&P futures chart and I want to take a look at the Dow 30 stocks. Right now, they're all pretty light, thinly traded. We already saw some of that whipsaw action, okay, just from the PPI numbers that came out earlier. Now, keep in mind, as we come back to right after the session open, we do have a Fed speaker, Austin Goolsbee. 10 a.m., we have consumer sentiment. Now, all of these are areas where we may see price jump up or jump down, okay? Now, if price is aligning with a supply zone or a demand zone, it becomes a trade opportunity. Please don't take the information on the chart as a trade opportunity, okay? The information is to help us understand the trading environment, okay? The other thing we have to consider right now as we come back to the equity indexes, S&P, NASDAQ, Russell, Dow are all starting off early morning session inside the prior session's range, okay? Now, when we start off as an inside day before the session open, we often see the gaps fill the same trading day, okay? So let's take a quick look at that. Well, there's not much of a gap on the S&P, okay? And you can either use the 4 p.m. close or you can use the 5 p.m. close or the 6 p.m. open, okay? Find one that fits your trading style, but that whole range is where we find that potential gap fill. We also understand that on an inside day, the price often is very choppy around the open. And the good trade opportunities come from a demand zone or a supply zone, not a breakout trade, okay? Dow, also very quiet in the pre-market, looking for more of the upside movement, a breakout to the upside above 42,801, okay? But still, a breakout is a much more elevated risk at this time. So if we should get a pullback, okay, I want to look right inside this area, right where we had the overnight session low, okay? This would be one of our first opportunities. I'm going to drop down to a 5-minute chart and start looking inside that area for that leg base group of candles. Okay. When we use that leg base group of candles, it helps us describe the risk on the trade. It helps us recognize how we can size our position accordingly. Okay. And what I mean by sizing the position is that whatever your risk is per your trading plan, okay, that you can take that risk, entry, and stop loss, okay, and use that to help choose how many contracts to trade, okay? NASDAQ, we have a prep screen zone. This is a newly formed prep screen zone. Again, zones formed during the regular trading hours, okay? So around the open, I'm not going to participate in the breakout trade, although a lot of folks may get pretty excited about taking a breakout to the downside, okay? Let's not take breakout trades on inside day. They often fail and they're kind of whipsaw action. So we will look for an opportunity to go long on the NASDAQ down around that 20,272, 20,238, okay? Right now, the NASDAQ stocks are still pretty quiet in the pre-market, except for Tesla, okay? We have to keep in mind that also on a daily chart in the upper corner, we have come into an area which is correlates with our Fibonacci retracement areas that often when we make a lower high, there's an 88.6% retracement, okay? So on a daily chart, we see that retracement up to the 88.6, which was at 20,446 area. And now we're anticipating there might be a need for price to pull back to find some buyers, okay? If it's going to continue higher, okay? Now the risk is getting a little bit higher now, and I want to point out a few things as we bring up our a picture outside the price chart, kind of getting an idea of what is happening. The pre-market indicator, okay? NASDAQ pre-market indicator is flat here at the open or near the open. So making us a little confused. What are we going to do? Go long or short? Well, the NASDAQ pre-market indicator is not indicating a gap up or a gap down at this moment. And we have an inside day. Combine the pieces here. Good time to wait, okay? The information itself says, hey, back off a little bit. Don't try to make a trade out of something that's not there yet. Dollar has been consolidating after a run up. We do have a potential topping pattern around coming into play. Topping patterns often come into play 83% of the time after a continuation pattern. You had a nice bull flag formation, 83% of the time, after a continuation pattern comes a reversal pattern. Okay. So we're prepared. We're really defensive as far as that goes. The 10-year yield is up at 4.108. They're really trying to move some of that debt. Okay. Also the 10-year and the 2-year. The 2-year is right at that support area. Okay. Now we're watching how each one of them are playing out, because these have had, not this week, okay? And I want to point it out, not this week. The last 4 days, the equity indexes have been running up with the dollar and the 10 and 2-year yield, okay? That's not the norm that has been going on for about the last year, okay? So something's not right, and you may be feeling a little uncomfortable. If you are just trading the equity indexes, you might have this thought, and something's not right. Something's not right. Well, we look for evidence to help us recognize when those things are not right. What's standing out? Dollar, 10-year, 2-year yield, markets are running with it. In the pre-market, the trend is kind of in the neutral area. It's not above 2 or below 60. We look for that to see if there's more buying or selling coming into the market. Those are some extreme areas to get ready for it. But being in a neutral area, we just we know we're going to have a slower, possibly more whipsaw, choppy open. Okay. These are all signals, and I don't want to get into such a teaching mode here at this point, but the caution is we're not looking to trade right at the open unless price drops into a demand zone or into a supply zone. Okay. We're planning on waiting a little bit longer. Okay. We have a Fed speaker, and then right after that at 10 a.m. Eastern, we have a consumer sentiment coming out. Okay. So knowing when to wait around the open and knowing when to aggressively jump in are really good things to be mindful of. We teach a lot of this at themarketinstitution.com so that students are prepared for what is the highest probability outcome for today. And we learn each day about how to use these equity indexes. Okay. Russell has been doing its own thing over the last couple of days, had a slight downward sloping channel on the daily chart, often associated with a bullish flag. Okay. But we are getting a little deeper into that pullback. I also want to point out that the Russell is right on the 50-day moving average. Okay. Now that's significant. Closing below, we could look for potential more downward. Okay. A lot of times traders use that 50-day moving average as a benchmark to be whether to be bullish or whether to be bearish around that. Okay. So the Russell, right where that 50-day moving average is right down in this area. Okay. So in the overnight session, it looks like they used a zone, and we might see a retest of that. Okay. Remember, zone entries only. Okay, so let's drop down and let's find a zone inside that area, and we'll set up a trade. And I use the blue dots to help us with the leg base group of candles. And I'm going to start turning down the time frame to look for that leg base group of candles, because what we see is very often price changes direction when that happens. Now, depending on your trade plan and purpose for trading, you can keep going smaller and smaller until you find the right risk parameters. Notice even though I'm going smaller, I haven't been able to change the zone per se. There we go. Yeah, it's pretty much the same all the way down to the 5-minute chart. All right, so with that in mind, 21.97, 21.94, so we got about a 3-point risk on that trade. Make sure you know the value of each contract, point-wise and tick-wise, okay? So I'm going to set this trade up. I'm using a couple of micros around the open. I'm choosing to use micros because the volatility on an inside day may be a little more elevated risk, okay? So the micros will minimize the dollar amount that I'm willing to risk on this, okay? So looking for an entry, a little deeper in the zone. So I'm going to use a Fibonacci price retracement tool. When I'm looking for a zone entry, I use the 88.6% retracement. Now, 88.6 is just to help me get a price level, 21.96 and 40 cents. Okay. So 21.96, 40 cents. I'm going to place an order out there. We'll start with just 3 micros on the Russell. 96.40. And I'm going to place a trade at 96.40, and I'm going to come back in and place a protective stop. You can go right at 94.20, or you can come in just a little bit lower, okay? You determine your own risk on a trade, okay? I'm going to come just a little bit lower. Mainly why I'm giving it a little extra wiggle room and sizing my position smaller is because of the potential of the volatility of the market at the open. Low volume leads to high volatility, okay? Now, I also want to point out, as we come over to the equity indexes, a channel, tight range, is low volatility. Notice in front of the low volatility leads to high volatility. Let's just take the NQ for a moment, okay? Each time we start to have turning points, we have low volatility, a price basing, led to high volatility. Low volatility led to high volatility. Low volatility, okay? So this does not mean the price is going up or price is going down. If it goes up, then we will, okay? If it goes down, then we will, right? We're planning for potentially some bigger volatility based on what the charge pattern doing. Impulse and then a correction, and an impulse and then a correction. So we are planning for some type of an impulse leg. Whether that goes up or goes down, that still remains to be seen around the session open. If the direction, the implied going up is probably a high probability, okay? And I am looking right here on the Dow. Remember, everything is an inside day, even though breakout trades may be tempting to look at. We have noticed that a lot of inside days, the breakout trades often fail, okay? From the PPI report, we did get a very nice jump off of with the Canadian dollar off a demand zone. I was off looking at something else and didn't get to participate, okay? But I want to go down to a smaller time frame and look inside that area and see if we can find a way to get into that, okay? In the same notice with the FX markets, we see that we have some small resistance levels for potential breakout trades on those. All right, let's bring up the Dow. Okay, down below on the Dow, if the Dow starts coming down, we've got this big dead space and we have several, well, we have one big pocket of points, okay? Now, historically, when you start looking at these big price moves on very light volume, it's almost like a gap, okay? with the Fibonacci projections, we still have to wait to take we're not taking breakout trades, and there's no zones up here. There's only Fibonacci projections up here. Okay. The range is where we have a confluence of Fibonacci levels all matching up. These are not used as zones to enter a trade short. One can, but you're using additional risk. Combining Fibonacci measurements along with supply and demand is one of the key elements of having and setting up a successful trade. Okay. See, all these techniques, whether you're using old techniques that were derived and documented in the early 1930s, okay. Actually, I'm noticing another picture here that I want to exploit. Looks like we have hit this range 3 times, okay? So one of the chart patterns that we have been watching is when we have resistance on top of resistance, or the lower resistance on below the upper resistance here, is that price likes to use this resistance as a potential trade opportunity, okay? So we'll look at that range right in there, probably the upper part of it, okay, right near the prior session's high, about 42,859, 42,821, okay, as a potential short trade, okay, at resistance. Little more risk on this. The lower risk is going to be looking to go long when price drops down to a demand, okay? And let's size this one up. I'm going to drop this down to 3 micros, okay? And oops, I need to change that. 4 micros. MYMZ24. And just out the open, we'll look for that opportunity to go long around that 42,693 and placing our stop just slightly lower, okay? All right, 42,693, 3 micros. Now, remember, as I'm setting up these trades, okay, the Dow 30 stocks are still very light volume, okay? There can be some additional risk and slippage, okay? So be prepared for that. All right, so setting up the Dow, 42,693, then I'm going to come in, place my protective stop right about that 42,660. Okay. And this gives us that full range. That will be the risk on my trade. Okay. Now, inside days are a little more difficult to trade. You can see that price is still currently inside the prior session's range. They're choppy. So zone entries only. Breakout trades are very short-lived. Okay. Once price breaks that 42,801, I am going to look for a short opportunity about that 42,844. Okay, right up in that resistance area. Okay. So price could go either way at this moment. Okay, we're really in a tight range. Okay, we are expecting a impulse wave. I just don't know if it's going to be an impulse wave back down or an impulse wave continuing the uptrend. That still remains to be seen. Okay, the higher time frame trend is mostly to the upside. Okay, so a pullback into demand makes it a higher probability trade. NASDAQ, okay, NASDAQ's looking to go the other direction. NASDAQ is a market capitalization weighted index, meaning the larger market cap stocks move the index more than the smaller market cap. Tesla is getting a nice pullback, and let's pull up Tesla for a moment. TSLA. Because the pullback that we're seeing on Tesla, okay, we need to see if it's dropping back into a demand zone. With all the new stuff coming out, they're going to make this look not so great. Okay, but we can see we have that resistance on this higher time frame, and we have our buy territory. Now, if the pre-market indexes, okay, are dropping mainly because of the market capitalization and weight of Tesla, if Tesla drops into a demand, we could see a pretty good rocket back up. Okay, so it's I'm going to keep breaking this down. What I'm looking for now is that we had made a higher low going into the breakout where we took out all the sellers. Okay, so I'm going to put the little blue dots on here. We're going to look for that leg base group of candles. And right now, you can see right here where that gap up is at, we have a leg, base, leg out, and a base. Now, why is that so important? Well, look where they're dropping price. They're looking for buyers right now. Okay. And right now we're seeing that people are looking and going, oh my gosh, it's down 7%, 8% in the pre-market. Okay. What do you think they're doing? Why doesn't it keep on dropping? It's because there's an accumulation of orders going on. Okay. So as we're watching the potential pullback on Tesla here in the context of an uptrend, prices dropped into demand. So around the session open, and let's drop this down a little bit further. I'm gonna go down to a 20-minute chart and see if we can pin, oh, look at that. We can even make that range a little smaller. Okay. And look what it dropped right into. This is why it's important to recognize leg base group of candles. I am going to place a stock trade on this. And for those that are trading options, you may be even looking at, options on this. Okay. So I'm going to look to go long as price comes out of this zone. Okay. And let's come back out to a larger time frame. There's a lot of upside potential on this. And look what the larger time frame is building right here, where we've had sellers come in and push the price down. This whole area is potentially an accumulation of orders. Okay, and we've seen the same price pattern where we had accumulation of orders, where we had low volatility leads to high volatility, and so on. Okay, so the upside potential is a targeted range. And I would even say looking at the previous high or the all-time high, okay, we're looking for that pullback in this zone for a move at least up to the resistance area. So I'm going to do this with just 100 shares, okay, not a big one. I'm not a big stock player, but we are going to place an order. Buy stop market at 221.70. Hold on. And I'm going to place that. Oh, we got the market open. Okay, so. Okay, so we got that one going. Let's bring that back up out here to S&P. Checking our Dow trade. Dow went up and hit one of the Fibonacci projections, pulling back. NASDAQ went the opposite direction there. We're looking for a long down below 20,272. And let's bring the Russell's kind of all on its own at the moment. Let's come back to the S&P. Zone entries only. We're going to anticipate that pullback, and we're going to look for a long coming in around that 58.20. And I do want to put up that 88.6. I'm going to look for a zone entry. Now, very often when you see so much of the market as an inside day at the open, okay, things are choppy. It's not going anywhere, okay? And 58.18 is where I'm going to look for that long. And then we'll place our stop loss, 58.15. And we'll just have to wait for that, okay? So let's look how we're doing on gold. Yep, gold continues to move up, okay? As that moved up, I did add on 2 more micros. I've been we started off this trade back a few weeks ago. Started off with 5 contracts, micros, and then I added on 1 more 5 contracts. So we had 10. Took the first 5 off at profit target and took 2 more off. And then as price consolidated and made a new base, I'm letting 3 run. And as we formed a new fresh accumulation of orders, I added on 2 more back to 5 micros for my gold trade, a little longer term play, and so on. Nat gas right back into a demand zone, just below the breakout yesterday. Okay, so let's start with nat gas as one of our first trades. Very strong drop. Okay, not a lot of selling, just no buying. Okay, they're dropping price to find those buyers. So 2.695, or sorry, 659, which is where we're at right now.
Order filled.
And I'm going to trail this with a 13 tick trailing stop. Okay, now that's just my trade plan. Make sure that anytime you take a trade, you know your risk on the trade and it fits your trading plan. Okay. And often we see newer students take too much risk on a trade. Okay. It's not the lottery. We have to manage all that risk. All right. So we are seeing S&P still chopping around inside that dead space. NASDAQ did come down into our projected area. And as we are watching this form, price breaking back up into the dead space should have a pretty significant move back to the upside. Okay. As we consider this, most of the orders have been filled. Okay, in this range. It's almost like a big gap. Okay, when you have a lot of field orders, there's not a lot of transactions. Supply zones and demand zones inside the dead space often get run through. Okay, so we're still kind of waiting for that price to come into play. We did hit one of our Fibonacci projections. We got a bounce. Now, if price breaks this level, there's a big pocket of points and a dead space in between. Okay, which is going to cause a little bit of a panic here at the open. But what that's going to do is help the S&P get back down to our entry, and it's going to help the Dow. Oh, look at those Fibonacci projections working now. Okay. Glad we didn't set that one on. I was looking for demand first. And these are not zones up here. They're just projected moves. Okay. Got a whipsaw going on here. All right, so I do want to get ready for this. Let's give you a look at the zone. Okay, you have a prep screen zone that was formed right around the session open a couple of days ago. Okay. As price has a very strong move out of there, not a weak move. We're going to look for using the distal line up to the rally. And we are going to look for that 88.6% retracement inside that prep screen zone as a place to target our entry. It looks like it's right on that level. So we're going to go 20,270. 20,270. And we're going to park an entry to go long right around that area. In case we get that drop. Now, why would we expect a drop? Well, there's nothing in the way. Once it clears the prior session's low, the only area left below it is a demand zone where we had buyers step in before. Okay. Ooh, look at Russell run. Now, this is not a time to chase it. Okay, we're still inside the prior day's trading range, and it looks like we do have a leg base here. Okay. So we could look to take a short-term pullback, but look at the daily chart. Is the risk going to be elevated if it starts breaking out of this, what many traders might think is a bull flag? Okay. Now the risk is up to you. Okay. So I'm going to look to take a short-term trade.
Order filled.
And what do we get filled on? Oh, I must have been stopped on my net gas. Okay. With the trailing stop, I lost $80 on that trade. It did get a little pop out of there, but not enough demand to send it back up. Okay. So price may want to go a little lower. And that's why we manage our risk, is that we don't know if there's a large stack of unfilled orders, especially on these small time frames, or if it's just a small stack. Okay. Okay, here we go. Crude oil. Let's get back on crude oil, but let's check a look at the Canadian dollar. Canadian dollar is still strengthening after this. Looks like a very managed sell-off back down to find some buyers. Okay. So I'm going to set up the crude oil as a breakout trade.
Order filled.
And to jump in right away. And I'm going to manage that with a 25-cent trailing
Order
stop.
rejected. Order rejected.
Oh, that's what happens when you run out of money. You can't trade everything. Okay. But I do need to get a trailing stop on here. There we go. See, what we're seeing is we got a potential breakout trade opportunity. We still have to manage our risk. Okay. Nice little basing action going on with the NQ. And we got to be prepared that it may either, I mean, it's just going sideways at the moment. But this is where banks and institutions are consolidating. I mean, there must be some buyers down here. There must be some sellers up here. So we just have to kind of wait a little bit longer to see how that is going to play out. All right, we do need to be looking at the long on the NASDAQ. Notice how the Qs have dropped down into a support area, now the third touch. And I'm gonna come back to that. And we're gonna look to go long above with not many obstacles in front of us, even though you have all of this area, it's been in a consolidated range. I mean, all the orders have been filled. Okay, so if price does start to move back up, this should be a pretty sustainable move up in price. We just have to find a way to manage our risk once we have our entry. Okay, so I'm going to look to enter around 20,348. $348. You're still using some micros, and then we're going to come in. Once we're filled, we'll come back in and place a protective stop loss. Okay. Now, I don't want to put a trailing stop on this because the way that this product whipsaws back and forth could immediately take me out and I miss the bigger run. So I'm looking at placing a hard stop, and I'll keep that right about that 20,330 area, kind of right in the middle of that range. And keep in mind, that was one of our Fibonacci projections to the downside. So we're using a confluence of Fibonacci projections and lining that up with a demand. Okay, there was no demand zone over to the left. Let me point that out. Okay, so Fibonacci projections are one group of traders that come into play. Okay, and support and resistance, trend line breaks. There's a lot of different techniques.
Order
okay?
filled.
But this fresh accumulation of orders below that support area, okay, is saying that if we have this price move back up, okay, there's not much in the way to take this, okay? Now look at the stocks over here. We need a little more help from Google and Apple, but Meta's a nice move. Amazon's moving up, Microsoft, and we need a little more of a push on Tesla, okay? So let's get our protective stop loss in place. 20,330 is where I'm going to initiate that. Now, I recognize that my risk on the trade is still right now about $140 on the 4 micro contracts that I've placed. Okay. Now, if $140 is outside your risk parameters, then you need to remove or get out now. Okay. And we're getting that little volatility. Notice the time. Okay. Price dropping into demand or supply around the quarter hour between 8 a.m. and 11 a.m. Eastern has been a pretty good opportunity. Okay. Now we do have several other trades set up, and we're just kind of waiting for them to hear order filled. Okay. We are in our crude oil and we are in the NASDAQ here. Now we have nothing along the way, okay? And you can take a profit anytime you like, but you may not have another entry to get back in, okay? Now I anticipate once price starts to get into this area, and we just now have a Fed speaker coming out too, okay? By getting to know the different Fed speakers, you know if one is more with the narrative or if one is kind of going against it. Okay. All of these folks are grandstanding right now in front of the election, mainly because they want that that extra job to be the representative for the White House, okay? If there's a new administration that comes in, usually they pick a different Fed chairman, okay? It's a nice little extra job, okay? So we're seeing a lot more of them come out, but we want to see how they're taking a stand on what the economics are, okay? All right, so this one is underway. Our stop is in place. And let me give you a visual of where our stop loss is at. Okay. And I want to recognize, and sometimes it's good to put on the chart here. Okay. Now, if the distance between where we entered and our stop loss is $140, then what is our potential profit to the upside? Okay. Could be quite substantial. Okay. But we also want to focus on the risk management in a trade, not so much as the dreaming of what we could make. That puts you in the wrong mindset. Okay. Oh, wow.
Order filled.
Just stopped on crude. Okay. So I'm going to take another shot at this. This is where the sellers are at, and we can see that sellers have been pushing that price down. Okay. I did take a small loss on that, but I'm going to come back in. They're still using up all of those sellers. Okay. Okay. And once filled, I'll come back in and place a protective stop loss. Not much going on here with the S&P. The tick, SPY. Okay. Qs are still moving in the right direction. And it does look like they want to keep this SPY moving up as well. Okay. We have platinum approaching one of the first supply zones, and there's the metals have had a nice move up in price and potentially looking for the sellers. Okay. Silver, we have a supply zone up there about 31.97 or 31.91. Let's bring up silver. Okay. Came down, found some buyers, now coming back up to find the sellers. We had platinum. Right, platinum's had a nice, oh, sorry, that's copper. We want platinum. Okay, platinum has a couple of different levels where we might find some sellers. Okay. 993, 997 for a short-term trade. Okay. Gold up now 28 points. Tesla approaching. Yeah, we could start to see the thank you for that. There is even a wider zone too. It might be seen on a larger time frame. Okay, because there's a lot of congestion right here. Almost like they knew when that they were going to do the promotion, right? couldn't have helped, being around a couple of, political rallies also. Funny how that works. All right, so we're still waiting on Tesla. There's a nice gap to fill. The sellers are much higher, but we don't want to give up on that range. And by adjusting your time frame up or down, we can look right in that range for your first profit target. Back up in that little sell territory. There we go. I don't trade a lot of stocks. I mainly focus on the futures products, okay? But it's the same pattern, same methodology, same approach that we use here at the market institution. All right, we are seeing that the 30-year is holding that demand area, but the 10-year and the 5-year still have demand a little bit lower, okay? Dow almost got up to that area. Let's come back and look at the chart there. Okay, so it looks like our Fibonacci projected move is holding for the Dow. S&P looking like it wants to break out. Our projected moves on that 58.51, 58.63, and 58.80. Okay. Keep in mind, projected moves are not supply zones. Okay. Taking trades around that area are going to be elevated risk. Okay. Adjusting the blinds there. Okay, breakout trades, elevated risk. We're 6 minutes away from the consumer sentiment report coming out. Yeah, NASDAQ trade is still working out. Stocks are starting to look a little more healthy. I do have these all on a 10-minute time frame. And what I'm looking for over here is just basically, are they all painting green candles or red candles? Okay. If we have a mix of red candles and green candles that are painting right here, then we kind of know that the NASDAQ futures are going to be kind of sideways, choppy. If they're all showing green, then generally the price is going to move up. We're still kind of uncertain. Apple's still not sure if it wants to go back up yet. Tesla, we are looking for that potential bounce. Okay, but it has not yet showed the strength yet. Okay, Netflix, Microsoft. Okay, now the stocks move first, and then the exchange traded fund follows. Okay, which are the Qs. And then what follows that would be the futures. Okay. Nice thing about trading futures product is that you have the underlying cash market moves first, then the futures adjust. Okay. So we'll continue to monitor that. Once price starts breaking into this area, we can reduce that potential loss. Okay. Now, right now, we still have $140 worth of risk on this trade. Okay. And as a trader, you can take a profit anytime you like. Okay. But we need to find ways to manage that risk. And maybe once price moves 1-to-1 in your direction, okay, take half the risk off. Okay. Now, if you're trading multiple contracts, there are a lot of different ways that traders do this. Okay. When trading multiple contracts, you might just leave your stop loss where it's at and then just take one contract off or take another one off, which will buffer that risk. Okay. Now, the risk is the distance from your entry to your protective stop loss. Now, once price moves 1-to-1 away from that, okay, you can determine if that's going to be part of your trading plan and you adjust the risk. You may say, well, I like it to move 2-to-1 before I adjust the risk, or 3-to-1. Okay. Now, keep in mind, there's no obstacles over here, so there's no urgency to adjust the risk at this point. Unless you just feel like, hey, I want to lock in or I want to take the money. Everybody's going to be a little different on that. Okay. The stocks are not showing a lot of weakness yet. Okay. Not a lot of weakness at all at the moment. Okay. So if the stocks are remaining strong and the Qs are still looking to move up, then our trade is safe. If we were getting more of the NASDAQ stocks that were bearish, then we would definitely start moving our stop aggressively or look to take a profit immediately. Okay. All right. Yep, gold's right back up in that zone. The challenge of adding on and removing contracts is the first in, first out. Okay. So my 3 contracts that I have from the beginning of this move would be the ones that go out first. Now that can mess with your psychology, especially when you see your P&L drop, even though you might be showing a good profit at this point. Okay. Sometimes that kind of say, well, I'm either going to be all in or all out. Okay. I am looking for these to move up a little bit higher, as we have already indicated by looking at silver, looking for supply up a little bit higher, and platinum. Soybean meal and corn on deck as well. Well, look at this NASDAQ. It's just all on its own. Look at the beautiful move on Russell, S&P, Dow, and NASDAQ is just doing a whole lot of nothing. All right, Russell is approaching a leg base group of candles. It approached it right at
Order filled.
10 o'clock hour. Did we just get a whipsaw on the NQ? That was not right. Wow. I love my stops. So the consumer sentiment. Now I'm going to come back in on this. Consumer sentiment came out. Let's give this just a moment here. It was looking so good. A lot of choppy sideways range here. And due to the lighter volume, see, there's only been 123,000 contracts traded on this. Okay. We'll come back in here at 348. Nope, that's not gonna give me.
Order filled.
And that one's, we're now risking approximately $152, right? Here we go. It was a good area and there's nothing in the way to the upside. Getting back into a trade like this sometimes is pretty difficult, okay? Mentally. It looks like we're playing out pretty good, okay? So the whipsaw from the consumer sentiment report stopped us out with a loss of 140 bucks, right? We jumped back in around the breakout area at 20,348, and now we're looking for the opposing resistance and anticipating price to move up as long as our stocks continue to do what they're doing now, okay? Make sure you manage your risk. Russell, IWM has had a very nice move. Let's look for some supply on the IWM. And it looks like there's not much supply up here, but a strong resistance. And this resistance has been used once, twice, 3, 4, 5 times. Okay. And when a resistance area has been used up so many times, we may see price go through it. Okay. And then we'll look on the other side of that. Nice little gap down. You want to always make sure that your entry or your zone is in the right location. And having the right location means that you're in a sell territory that is located above the support. See how this was a fresh accumulation of sell orders, and we had some buyers propping up the price, okay? And then once price broke, there were no more buyers at this level. Okay, there were still sellers left up above. Now, if you just flip the chart over, you can see that this whole area, as we have identified resistance, can potentially be a fresh accumulation of orders that may turn into a buy territory, okay? Now, currently, price has made from the pivot point down, has made a lower low before potentially getting that breakout, okay? And that would put our demand zone somewhere down at the lower 2/3. With a lower low, we often don't see price hold that resistance area, okay? Goes right through it, as we are starting to see that now. And price going deeper into that zone, along with the bull flag picture. We have a supply and a prep screen zone up there about 22.45, 22.49. Okay. I'm not looking to take a short here. Okay. Now, it's always nice when you're doing these presentations if the chart just follows your dotted line or just goes directly, but you know, this is the real markets, okay? Even though during our live trading room, I do use a simulator to make the trade. We're using live real-time market data to do this, okay? I trade my personal accounts and our prop accounts over on the in my other screen here, okay? Beautiful move. How many are in the NASDAQ trade still working out here? Look at that go. Beautiful. Now we're just using 4 micros. Okay. Now, if you feel like price has moved up and you're like, hey, that's my daily quota. Okay. And you want to take the money, by all means, just hit the button. Okay. Now the price has made that higher high. This next little pullback and break above the high, then I'm going to adjust my stop to a break even. Okay, so I'm going to wait for and anticipate another pullback and then a break of the high, and then I will adjust my stop up. We might say, well, what if you don't get a pullback? Well, then we're just enjoying the ride. All right, let's take a look at the other trade setups. Russell never made it to our entry. Okay, so I'm going to cancel that order and potentially wait for supply zone. NASDAQ, we're already in, and the market is moving up. Dow has gone and approaching our third Fibonacci projection area, and we're racing for all-time highs again. Okay. S&P. Oh, let's go back to the Dow. The Dow did not drop into our demand, so that level is left there. And S&P is approaching the first level. Okay. Our Fibonacci projections. Okay. And this was all done based off of a 20-minute chart. Now that prices broke above the prior session's high, we have a fresh buy territory. So when they talk about buying the dip or the pullback, well, the pullback is going to be once price gets back to that 58.20. Okay. Now we anticipate a little resistance to come in play at each one of these Fibonacci forecasted areas. Okay. How you guys doing with the NASDAQ trade? Still looking good? Still no pullback yet. So I'm not adjusting my stop loss. See, right now you got to take a pulse of, the heart. Okay. How does it feel? If you're in this trade and you're participating in it and you start going, oh, this feels really good, might be the time to capture your profit. Okay. Right now we're hitting that resistance that's been in the middle of that dead space. Okay. Still no pullback. Price breaking above that resistance. We are looking for our first target back up there at this resistance. Okay. Now, using a tick chart, okay, using a tick chart, you can get a little bit more sensitivity of the price moving. Okay. Now, we go back out to our 20-minute chart. It all feels so random here. Okay. All feels so random because there's, what are you going to do? Just hit the button and jump in a trade? Okay. You need a solid trade plan to get into it. As long as you have the direction and a trend going in your favor, you can jump out to a tick chart and look for ways that you can enter that trade. Now, keep in mind that economic report stopped us out for $140 loss. Okay. There was nothing wrong with the picture. We just had our stop in a little close, what we were willing to risk. Okay. And we got stopped out based off of the reaction of that report. Okay. Notice the picture below that. And this is a really unique way to visualize this, okay? Notice how we have resistance and we built a fresh accumulation of buy orders. Price broke out, dropped back into the zone and shot up. That's the picture we are looking for when we're looking for supply and demand, okay? All right. I'm starting to feel pretty good. How about you guys? Nice little trade. Okay, let's look around at some of the other products. We're still waiting for crude oil. We still have that one. Now, at this point, the breakout trade, and we do have a couple of little levels up above as we look for resistance again. So our initial move from the breakout, we'd have target 1 at that point, and then we have another resistance up a little bit higher. So what we're doing is mapping out where we might have potential pullbacks. Being aware of when the traffic changes direction or when the market changes direction and what obstacles might be in play, okay, is a very powerful technique. So if price breaks out of this range, again, we would have a fresh accumulation of buy orders coming in right here, okay? Right now, it's just an area. Once price breaks above this area, then it becomes a buy territory and we can look for and see that the buyers have been pushing price up at this point, okay? Thank you. Now, for some of you that are new to what we're doing here, this may seem a little bit foreign to you. And sometimes new concepts are. But where do we get this information? Well, most of it is on the left-hand side of the chart, where banks and institutions built a position and they did not get all of their orders filled. Okay. All right, we're approaching the 10:15, which is a quarter hour. I'm looking for one more little push up, and then we're going to take the profit and do our Friday happy dance. Now, all of this was with 4 micros and less than $200 worth of risk on the trade. Okay. All right, here comes our quarter hour. Yeah, let's see if we can get that push right up into that area. These stocks are not showing any type of weakness yet, but let's take a quick look at the Qs. Qs came right into a little area of resistance. I think we'll still get a little more of a pop up there. Now, if you're using indicators on this, remember the Qs will lead what the NQ does, okay? Not the futures always follow the market, they don't lead the market. Okay. So as I'm watching the Qs on a smaller, well, on a tick chart, okay, 1500 tick, I'm watching each candle where the mid-range is of the prior candle that's complete compared to the candle that is working right now, okay? When we start to see a momentum shift or change, we start to see that the candle forming right now trades and closes below the midpoint of the prior candle. Now, what I'm describing is stochastics, okay? Well, stochastics use 3 candles And as long as price is closing greater than 50% of the prior close candle, okay, the assumption is the trend is continuing up. Okay. Now I'm approaching that feel good moment as far as doing a happy dance on a Friday morning. And if we can get done with our trade day early, not a bad way to go on a Friday. Okay. Now, what's making me want to take the trade off or get out? It's my P&L. Okay. It's a nice move. I mean, after all, we got 348 up to, we got 100-point move on the NQ for this. Okay. So I'm going to look to take this trade off and I'm going to exit at the market. I'm just giving you a heads up of what I'm going to do. And then I'm going to execute.
Order filled.
Okay. There still may be more upside. But we took a nice little profit. I recovered my $140 loss from the slippage of the economic report that came out. We risked another $140 approximately, probably a little less, and got back in the trade for a 100-point move on the NQ. Happy Friday, everybody. All right, let's jump back out. Whoa, SPY just erupt. Okay. This is why we don't trade the Fibonacci projections, but we do understand that they're there. Dow, ooh, new highs. How many want to jump in and buy right now? Ooh. Right now, the shorts are making the market go higher. How do we know that? Look where the trend is at. Okay. You take a look at the advancing issues over declining issues. Okay. All of this looks bullish, bullish, bullish.
Filled.
Okay. Bulls, bulls, bulls. And looks like we got back into that gas. Okay. Oh, we just got hit on the crude oil. Let's come back in. I'm going to use a trailing stop on this. And I'm going to sell using a 25-cent trailing stop. Now that's based on my trade plan, what I'm willing to risk on a trade. Okay. Woo. What a smoking move up. And looks like the NQ is still going. Now, there was no technical reason for me to get out of that earlier trade. Okay. It was a trade that I took off basically because I felt my profit was significant for what I was trading. Okay. I wanted the profit. Now, we always need to recognize that within ourselves, you know, it's okay to take that profit. Okay? I'm looking at let's move this out of the way. We might be finding a little resistance right here. And what I'm doing is adjusting the time frame to find that leg base group of candles. Looks like we just, nope, that's not quite it. We're on 17, 16. Now, of course, I should have been prepared for this a little bit ahead of time. All right, we finally got one right there. And we have our leg base group of candles. Now, after having a leg base group of candles, you can see that there were some unfilled sell orders still up here. Okay. And there we got price pulling back. Okay. Let's go back out to our 20-minute chart. %87 of the time, when you have a leg base group of candles, you'll get a 1-to-1 move out of that. Okay. The leg base group of candles is something that is proprietary to what we do here at the Market Institution. Okay. It's something that is a picture on the price chart that we often see where price changes direction. Okay. Now there's more information about that on our website. We have classes and courses that are coming up. And we do teach that and we go into explicit detail in what that is. Okay. And that's one of the reasons that we look for trade opportunities. And it doesn't matter the picture. Oops, I need to get a CRM. What's it doing today? Sorry. Down a little bit. I'm waiting for CRM to hit that supply up there. We entered, and this is going to be very powerful around earnings season. When earnings were released on CRM back in June, price dropped right back down to the demand zone. Okay. And this is where we entered a trade for 100 shares. Okay. As price started to go back up, and now we're looking at where we had some sellers come in, pushed it right back down to the buyers. And as we are moving price up, my next level, 298.60 is where we're looking to break above the resistance, and 298.60, 305 area is where I'm going to look to do the profit and the happy dance. Okay. Now, coming back and looking at Tesla and where we're at, by mapping out these areas along with a larger time frame, you can see that today's action price just dropped down to find more buyers. Same thing over here where price broke out, came right back down to find more buyers. And if you break down right in this area where the price changed direction, you will find that there is a leg base group of candles. When you start putting these things together, it becomes absolutely amazing how the picture changes. And you start looking at areas and being able to forecast the right side of the chart. Okay. All right, NQ did find some sellers here. The stocks are still moving up. We are anticipating some of the banks and buying activity is going to slow down. Between 8 a.m. and 11 a.m. Eastern, we often see that institutional order flow. And after 11 a.m. Eastern, we often see that it kind of goes back to the algorithm trading. Okay. Yeah, we could have stayed in there. Did anybody stay in the NQ for this up to the resistance and potential breakout? Look at that thing go. Now we can do the whine. Oh, I should have stayed. No, we took a decent profit. Over almost $700 on 4 micro contracts. Okay. Just hitting resistance. We're right at the bottom of the hour. Okay, a break above this is going to look pretty bullish. Okay. And we have upside, more potential moves up to the 88.6% retracement, and our targeted move up there about 20,645-ish. Okay. Ooh, S&P right at the bottom of the hour, just tagged that area. Our daily also has a forecasted area, but our stocks are not following through. IBM and Goldman Sachs are going opposite directions. Something doesn't feel right to go long up here. Dollar spacing, 10-year, 2-year. Okay. Look outside the price chart to see if this rally is going to continue or if this is a place to potentially take a short trade. Counter trend. And let's see, about 3 minutes. Look for one little more push. I'm so tempted to just you want to roll the dice. If we roll the dice, let's just do one micro contract. I know you're going, oh, it's gone up so far. It can keep going, and this is not a zone. Okay. But every once in a while, you kind of feel like things have gone up pretty sharp. Let's use, before I enter that trade, let's use this Fibonacci price extension tool. And let's see if there's a Fibonacci price extension that goes up into that range. We'll kind of look for what we would refer to as a V top. Oh, it's right there at, let's get the labels on there, 224 extension. Now, this is potentially a V top, okay? So with a V top, the move back down is 78% of the move up. Okay. Kind of tempting, isn't it?
Order filled.
And I'm going to take this one at the market.
Order filled.
It's one micro, and we're going to come in and place my stop loss at 58.69. I'll come up 70. And there's the bottom of the hour. So by taking one micro contract, I can test out my theory, okay, and looking for a pullback for a V top, okay, and looking for that pullback back down to 58.20. I can do it with relatively lower risk, okay? Before we wrap up today, please like and share. We will be doing these Friday sessions for a little bit longer. Please look and get in on our register on our website so you can get an email telling you when the Friday sessions are and what to expect. We will be altering that at the end of the month on the 25th. I will be traveling. We're going back down to Indonesia to do some work with our team and a few other things going on down there. Okay. So that Friday we will be off, but we'll be doing a live stream on that Thursday. So being aware of when we're doing our live stream so you can watch, learn, see if we're if this is a methodology and an approach that you like. Okay. So have a great Friday. please like and share, register on our website so you can get notices when we are doing the live stream and sharing some of this information. Okay. More importantly, we do have some flash sales going on, so check our website. They're pretty big flash sales. Get involved. Have a great rest of the trading day on Friday, and you guys enjoy it. All right. Thank you, everybody, and appreciate all of you for joining us in our live stream. Have a great day, everybody.